Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amanduri, and I'm joined today with Patrick Yip. He serves as the Director of Business Development at APMEX. Now, if you've been in the precious metals community for any bit of time, you've probably come across them. APMEX is like the largest bullion dealer in the world, and the first one that I've ever came in contact with. I bought my first ounce of gold through APMEX many years ago. And, it's kind of a close to home special place for me, because obviously precious metals have changed my life. It's a philosophy, it's a thinking, it's opened my eyes to, governments and, how the government is running and Austrian economics and just so many things, gold and silver. And I think we're still in a really exciting place for precious metals, especially going into 2022. So I'm excited to be talking to Patrick today to get that boots on the ground. What's going on in precious metals and what do we think might happen in 2022? So, Patrick, thanks for coming on the show with me today.
Hey, thanks for having me on, Kenneth.
For people who don't know you, please give them a little bit more of a background on who you are and, how you got involved with precious metals and APMEX. I mean, we were kind of having a discussion before the show here about that. And I think it's really interesting. You were a customer before you joined the team at APMEX.
Yeah, so to start, I'm the Director of Business Development at APMEX and One Gold. For those of you who don't know APMEX, I'm pretty sure everyone knows who the company is, but we're one of the largest online precious metals retailer. We've been in business for over 20 years, done over 15 billion in retail sales to customers, over 2 million customers, over 25,000 products in stock. I've been with the company for over 11 years. I've held various roles in merchandising, sales, project management, marketplaces, and now business development. My most recent position is I'm managing the company's fastest growing platform, which is One Gold, which is a company that allows users to buy, sell, and trade and redeem vaulted positions of gold, silver, and platinum. And in its first 3 years of existence, One Gold has processed over 650 million, in transactions. A little bit of background about me too in my personal life. So it was back in 2008, and I saw that everyone's 401k became a 201k, and everything crashed. And I said something's wrong here. So it got me to look into basically the economy, how everything works. Got into Austrian economics, and then I said, hey, maybe I should own some of these precious metals. So I bought precious metals way back then. And then in 2011 joined APMEX. So it was kind of aligned with my interest, and I've been loving it ever since.
Yeah. Yeah. And, maybe you're as confused as me as to what might have happened over the last decade. I mean, we've seen just the most epic bull market in general stocks. And, I think after 2008, I wasn't expecting such a move, but I guess that's what you can expect when you have trillions of dollars thrown at the system. Assets are going to go up. And we've seen that being reflected in stocks. And, what's interesting now in 2022 is, I think there's a statistic out there right now that says, the NASDAQ has a third of its companies down 50% or more right now, and I don't think the general indices are reflecting what a lot of the actual companies are dealing with right now. But it's a pretty big correction that we're seeing in the markets that are being held up, at least the general indices, by the big boys, Apple and Tesla and some of these ones, Microsoft. So, let's talk about that a little bit. Let's talk about the general stock market and kind of what are your thoughts are on this?
Yeah, so I guess first of all, no one knows exactly where the market's going to go. The market knows more than any of us. But what I like to do is I like to look at history to say, what can history teach us about the current situation? So as you and your viewers probably know, you hear the stat that inflation is at a 40-year high. And that means basically we haven't had these inflation levels since 1980. So I look back to say, hey, what did the economy look like before 1980? So I'm going to walk you through a little bit of a history lesson, shows how it corresponds to today. So let's go all the way back to the 1960s. So 60 to 1965, the economy's booming. The S&P increased over 50% in 5 years, from 60 points to 90 points. And I know it sounds like small numbers these days, but that's what it was back 8%. Then. inflation was running at 1.3% and no one cared about it. So it kind of sounds a lot like the past 10 years. Inflation was relatively mild, stocks are rallying, everyone's like, hey, the world's good. So go a little bit forward to 1965 to 1974. So inflation began increasing, and these numbers are according to the CPI. Inflation hit 3.8% in 66, increased to 4.7% in 68, 6.2% in 69, 8.3% in 73, and finally to 12.3% in 74. So the Fed realized that it obviously has an inflation problem. You see inflation increase year over year. The Fed responded by increasing rates from 1.3% all the way up to 13% in 1974. A crazy number if you think about that today, if the Fed increased rates to 13%. So I think, that to me looks like it corresponds to what we're seeing today. Inflation's picking up. So what did the S&P do? The S&P actually declined by 26% from 1965 to 1974. So despite all the inflation, people still lost nominal purchasing power on the S&P, but then when you factor in double-digit inflation, they lost a significant amount of purchasing power by investing in stocks. So that's one inflationary cycle. Another one happened in 1976 to 1980. So inflation began ramping up again. You had 4.9% in 76, 7% in 77, 9% in 78, and 13.3%, or 13.3% in 79, and 14.8% in 1980. So I guess if you look back at the 60s, you're like, well, what's going to happen to stocks? Well, stocks during that period from 76 to 80 increased by 4.3%. So about 1% a year, basically flat. Meanwhile, you had double-digit inflation. So you had a massive erosion in purchasing power. So I guess kind of long-winded answer to answer your question, if history repeats, and I'm not trying to make a prediction, no one knows what the future is going to do, but we're likely to see stocks flat to maybe down in this next inflationary cycle.
Yeah, it's interesting to try to even make those correlations either, right? And I agree with you. You have to look at what has happened in the past, but we're also in an unprecedented environment. Like we haven't seen anything like we've seen before, the lockdowns and, who would have predicted, half the world is in their houses locked down with stocks going like this, you know what I mean? And like, if you would have explained, this pandemic situation, trillions of dollars being thrown at the system, I would have expected gold to go up a little more. But at the same time, I'm seeing what's happening right now with stocks correcting, and gold is being so resilient through this. And, we are in that rising interest rate environment, and I'm pretty optimistic about what we might see in 2022 because of that. As, we get that baseline, that new base for gold to just take off from. I have to believe that, we could be looking at what could be the hottest sector in the market. I mean, I know I'm kind of a perma bull, but I do believe that, I don't know where else to look that can be as exciting as gold in 2022.
Yeah, it's actually interesting that you mentioned that. So actually, if you go back to the history, when inflation when it started ramping up, there was a couple of years that gold actually did not respond. So people said, okay, this thing, what's going on with this? You would expect gold to be an inflation hedge, but a couple of years passed. Going back to both those periods too that I mentioned, so 65 to 74, while the S&P declined, gold actually increased by over 460%. So from 35 to 198. And then going back to the 1976 to 1980, you saw a similar thing. When inflation started picking up, gold was a little slow to react, but it started at 103 in 76 and hit 850 in 1980. So, which is basically a 720% increase. So I expect that if history repeats, we may see something similar.
Yeah, no, that's really cool. So, in general, what are your thoughts on the Fed and in the current situation? It seems like they're dealing with such a volatile situation. I mean, an angry child, if you will, or a train that's coming off the rails. I mean, it's just such a balance. I mean, an airplane that lost one of its engines. Just some completely sensitive, volatile situation that anything you do will have dramatic consequences. And we are seeing that. I mean, you look at what happened in 2018. They tried to raise rates a little bit and the stock market corrected 20%. And we are in a correction with a lot of these stocks. And, what can they do without, they don't have room. They're trying to raise, but they don't really have room to do anything. And so what are your thoughts?
Yeah, I think the Fed's in a difficult spot. Going back to in the 1960s, it took the Fed 9 years to tackle the inflation problem. In the 1970s, it took 5 years. So if you look currently, we're seeing inflation just start to spike up in 2021. So it's actually interesting. At the beginning of 21, inflation was only 1.4%. It kind of ramped up gradually, hit about 5% mid-year, and then it ended at 7% at the end of the year. So looking at, if you assume 2021 is the first year of inflation, if you look at history saying it took 5 years and 9 years to tackle the last of inflationary cycles, we could be in this cycle for until 2025 or 2029. Once again, just history repeating itself. Obviously, I don't know the future. I really think the Fed's in a bind. If you don't increase interest rates, you risk high inflation. We saw double-digit inflations in the 60s and 70s. The Fed could go that way if they want, or if you do increase interest rates, I think you risk destroying the economy. You look at what inflation's running at last December was at 7%. Okay, so how do you solve 7% inflation? Either, maybe the supply chains and COVID restrictions turn back to normal and it declines. I mean, who knows? Time will tell. Or maybe the Fed has to increase rates to, let's say, 8% to tackle this inflation. But at 8% Fed funds rate means probably a 9% 10-year treasury and probably north of 10% for a 30-year mortgage, which I can't even imagine the housing market or the car market with 10% interest rates. I mean, that thing's going to crash.
Yeah, I know. It's almost like, is it possible for things to stay as is? But as we know, we almost need more and more of it. But at some point, how much more stimulus can they come up with? We've seen negative interest rates, when there's actually a negative yield from these governments. And, that was kind of an unthinkable experience. And I mean, who knows what's going to happen here, but, talk to us about the negative real rates in the environment and how that affects gold. Because I know the concern is that we're going to have higher interest rates, and that should be bad for gold because maybe money will get pulled from gold to go into, bonds, and people will chase interest and yields. But that's not necessarily the full story when it comes to how gold responds to a rising interest rate environment.
Yeah, it's interesting when you say that. I think a lot of economists think that as rates go up, gold's still going to decline. And their thought is that investors would rather own treasuries or something that pays a yield instead of owning gold, which basically sits there and doesn't earn a yield. I think just looking back, as I mentioned, from 65 to 74, gold increased by 460% from 35 to 198. It kept on rallying until what happened in 1974. So the Fed was actually determined to solve inflation then. So inflation hit a peak of 12.3%. The Fed's funds rate at that time got increased to 13%. So, which is once again just hard for me to believe or hard for me to picture a rate that high. Gold then responded negatively and fell by 50% in 74. So it kept on rallying until real interest rates turned positive. And then once again, from 78 to 80, gold increased by over 700% from 103 to 850. And I think many of you guys will know, so Paul Volcker, the then Fed chair, increased rates to 20% when inflation was running at 14.8. And then obviously gold responded negatively by correcting from its 850 peak. So I expect that gold will continue rallying until the real interest rates are positive. And as we mentioned earlier, inflation's at 7%. The Fed funds rate's at 25 basis points right now, so well in the negative territory. Not until that is fixed, either by a rising interest rate environment or maybe due to COVID restrictions easing up and the supply chain getting back to normal, but not until real interest rates start becoming positive do I expect gold to really have a significant correction.
All right. So I want to know about what's going on, boots on the ground, how are things on the physical bullion side, and what's interesting is we've seen what happened with lumber. We've seen what happened in the car market with shortages. I mean, I have a Mercedes and, we paid for a kind of a nice car. You're supposed to have some decent service where they pick you up and then they give you a loaner car. You can't even do that anymore. They don't even, it's like nice things are not even as nice as they were before because of all of this mess. I mean, there are no loaner cars, or if there is, it's like 2 months out. So you really can't plan on actually getting your car serviced in 2 months. Anyways, it's just like everything's a big mess right now. But what's more interesting to me is what is happening on the physical bullion side with the COVID just meltdown we've seen in our economy.
Yeah, so the last couple of years have been very interesting, unlike anything I ever expected to see. So, first of all, with COVID, you had the supply chain stressed, which led to product shortages. And then next, with the metals drop in March of 2020, where silver was actually at $12, which I bought some at silver, bought some at $12. Glad I did. Wish I bought a little bit more. Demand spiked through the roof. So what this has caused is basically a shortage of supply and an increase in demand. So we're seeing premiums at kind of levels that we have not seen in a long time. I don't even remember the last time premiums, if ever, were this high. And just to give you an example of what this means, so APMEX is an authorized purchaser from the U.S. Mint. Normally, we would buy Silver Eagles, and this is a normal environment, not today. We would normally pay $2 over spot for a Silver Eagle. However, the U.S. Mint can't produce enough coins for us, so we're having to source these coins from other wholesalers and dealers, which is pushing our costs well north of our original OEM cost from the Mint. And then with a company like APMEX or any bullion dealer, we just make a small spread on our product. So what we do is we're saying, hey, our costs are X. Hey, we got to make a small thing of X plus a little premium, and that's how we make money. All the metal is hedged so on right now, so we don't really care what spot does. But right now, you're seeing Silver Eagles at like about 10% over spot, which to me is just insane. Because to me, I want to speculate on the price of silver going up, and not on the price of premiums going up. So you'd hate to say, hey, silver's at $22 today. You're paying $32 for a Silver Eagle. And then maybe silver goes up. Maybe silver hits $30, but your premium went down from $10 to $3. And you're like, well, you made the right call on silver, but you made the bad bet on premiums. So it kind of leads me into what I'm doing, and what a lot of customers are doing with this is they're looking to a service called One Gold, which is a subsidiary of APMEX. And One Gold is actually selling silver at about 1 to 2% over spot. So a lot of people are getting into One Gold so that they have exposure to silver. And then when premiums return back to normal, they're redeeming this metal for actually their Silver Eagles, Silver Maples, whatever they want. I can get into One Gold a little bit if you're interested in hearing about that. So One Gold is a newly formed company, a 3-year-old company owned by actually formed by APMEX and Sprott. So what One Gold is it currently has agreements with different vaulting companies around the world. So we have agreements with Brinks, Loomis, Royal Canadian Mint, CNT, and APMEX. We then source metal. So we buy these big bars, so 400-ounce gold bars, 1,000-ounce silver bars, and store it in the various vaults. We then list the metal up on One Gold for sale. We actually won't sell metal that we don't own. So during the silver squeeze time in early 21, we actually had to pause metal because metal was not available, which is kind of a whole different story. We can get into that in a second. When metal is purchased, it's owned by the customer, so it doesn't appear on One Gold's balance sheet. Premiums are attractive, like I mentioned. So since you typically own part of a larger bar, gold's sold at 80 basis points over spot, silver between 1 to 2% over spot, and platinum for 3.7% over spot. All the metals insured against theft and loss. It's regularly audited. And if you want to take possession of the metal, which is what a lot of customers are doing, you could actually swap your positions in One Gold and redeem it for any of the 25,000 products available on APMEX. So kind of high level what One Gold is doing. Like I mentioned, we're seeing a lot of customers who like physical, but they said, hey, I wanted exposure to this, but I don't want to pay insane premiums right now due to COVID, which you have to imagine will go away at some point. It's just whether it's going to be in 6 months or a year or 2 years.
Yeah. So what are your thoughts on silver then? And so I want to switch gears a little bit, because silver honestly is where I feel like the leveraged upside is. But it's been the most demoralizing area to be in when it comes to the precious metals market, because, it's still below $30. It's still, less than half of where it was in 1980. So, I mean, really, it's been a rough place to be nominally, over the past many years. So, what does silver need? And, what are your thoughts on this?
Yeah, so I think right now, to first start with gold, I think just looking at history, gold is going to typically rally first. And we're kind of in the situation, I think we're right at the point when inflation is starting to ramp up. Obviously, we just saw it ramp up last year. I think this looks like a lot of what happened in the 60s and 70s, where you're going to have inflation run for the next several years. Gold's initially going to probably do lag a little bit, just like what it's done in history, and then you'll see gold start to rally. And then typically what happens when gold starts to rally is silver tends to rally after gold, but makes a much more dramatic move. So like if gold increased by 10%, silver might increase by 20%. And so on. But I think what you need to happen is first you need to have inflation, which we're certainly having right now. You probably need to have rising rates, which is what happened before, where the Fed tries to tackle inflation. So you'll see gold rally, and then I wouldn't be surprised to see silver rally bigger and faster than what gold does.
And what's a realistic expectation for silver in your mind? I don't want it to be a prediction, but you know, one of the things I used to say, people used to talk to me, ask me about Bitcoin. I'm like, you know what? I wouldn't be surprised if it goes to 50,000. You know, that was when it was, 10,000, 5,000. I used to say, and obviously that makes me look like I'm a genius again. I'm not trying to like pat myself on the back because I've been wrong on a lot of things, but not a prediction, but what is realistic, to you to see silver do going forward here?
That's a hard one. With any prediction, it's. I feel like you're bound to be wrong
What
at
would you
some
be
point. But
happy with? I guess, like, you know what I mean? Like, what would be like, what's realistic, in the next couple years?
so going back to those numbers we looked at earlier, so gold made its most recent low in 2015, around 1,050. And I'll start with gold, then I'll go into what we could see with silver. So gold hit a low around 1050 in 2015. If it sees that 460+% increase in the 1970s, or that 725% increase in the 1980s, and a big if, no one knows if history is going to repeat, that means gold could reach between 4,800 and 7,600 in the next inflationary cycle. And once again, this could be 5 years, it could be 9 years if you look at history. I'm not saying it's going to go there tomorrow or even ever. Who knows, right? Time will tell what it does. And then you look at something like the gold silver ratio. Where typically what happens when the metals rally, the ratio goes down, meaning that the price of gold divided by the price of silver is less. I think it lasts, during the COVID times, it hit about 120, and it's been as low as, let's say, probably about like 10 to 15. I don't know if it's going to get there. I think the 120 was an extreme. I think even the 16 or 10 is maybe extreme. But let's say it gets down to 30. I would not be surprised to see, whatever the gold price is, let's say the 4,800 or the 7,600 divided by 30 or something like that is probably where I would say silver could end up. Once again, no one knows history, so I'm just making a prediction, but time will tell, right?
That's cool. That's cool. Yeah, I tend to think that we could see a Bitcoin style move in something like silver. If gold really does have that move. And I know it's a little bit crazy, but I wouldn't be surprised. And I mean, again, think about how crazy everything else has become. Real estate, the stock market, crazy lockdowns, trillions of dollars. I mean, think about it. If I would have said, yeah, we're going to be seeing trillions of dollars of spending, back in 2008, in 2022, like, well, the way we're spending money now, only 15 years ago would have just been crazy. And so the precedence is there for crazy things to happen. And the thing is the metals have underperformed the craziness all around us. So having said that, there's a big move of catch up that needs to happen just to get on par with everything else. And that's where I think a lot of the opportunity is.
Yeah, I definitely agree.
Patrick, I really appreciate your time. I mean, if there's anything else that, you'd like to mention or that we didn't get to, obviously One Gold, AppMax, anything about the economy. I mean, if there's any other thoughts that you'd like to share, please do that. Because, again, we really appreciate your insight and, your expertise and just taking the time to be with us here at Crush the Street.
Sure. Yeah. One more thing I want to touch about One Gold. I know a lot of your audience, and I'm certainly a believer in owning physical metal too. I actually own physical. I started with physical. I definitely recommend everyone own some physical. But what we're seeing, and sometimes our larger customers too, is maybe you start with physical, you have a couple $100, it becomes a couple $1,000, it becomes tens of thousands of dollars, maybe it becomes a couple $100,000, or maybe north of $1 million. At some point, people start getting worried, and we're seeing certain customers like that too, where they're like, "Hey, I don't want to hold $1 million in gold and silver at my house." They start worrying about theft. They start worrying about natural disasters. A whole bunch of things start worrying. So like you initially meant to protect your wealth, and now you start worrying about your wealth, not due to the government, but due to other things beyond your control. So that's why we have a solution, obviously at One Gold, and we like to have a solution for everyone. If you like physical, that's great. We'll gladly sell you physical. I don't have any problem with that. We'll gladly take your order. But for certain people, One Gold is a great option too. And I certainly own both. I have physical. I own One Gold. As I mentioned too, the premiums are relatively low on One Gold compared to that APMEX. A couple other things too on One Gold too is we have this ability called auto invest, which you could actually set a set dollar or ounce amount and make regular purchases. So for even some of the smaller investors who say, "Hey, I want to put $100 into gold," well, unfortunately, that's hard to do in the physical space because you're going to get a gram or two, which is not going to really do much. So what you could do is you could actually set a dollar amount and an interval, let's say every bi-weekly, every month or so on, and let basically dollar cost average into gold. So an interesting stat, if you look at the past 50 years, so gold's averaged 10.9% return, and the silver's 13.4%. If you invested $400 in gold, let's say 10.9%, let's be conservative, for 30 years, and you got a 10.9% annual return, you'd have $1.1 million. So kind of an interesting thing that allows people to save in gold is through One Gold's auto invest program.
That's awesome. Yeah, that's awesome. Well, there you have it, everyone. 2022, the opportunity in gold, the opportunity in silver, do your own research, but, take a look at what's going on around you. The markets are melting down. Gold is holding up. I really believe that gold wants to go higher here. It's my instinct. I believe there's a lot of precedence that shows us this. There's a lot of catch up that needs to happen. And I really can't think of another market to be more excited about than the precious metals market here going forward in 2022. So Patrick from APMEX, One Gold, thank you so much for coming on the show with me today.
Hey, thanks, Kenneth. Just one last thing too. Check us out on apmex.com or onegold.com. We have both mobile apps for both companies in the Apple App Store and Google Play Store. I actually have a little coupon for Precious Street listeners too. So if you log on to One Gold, we offer a coupon, $5 off a $100 purchase with the coupon code STREET5. And if you make a $5,000 purchase, we have a coupon STREET100 for a $100 purchase off a $5,000 purchase on One Gold.
Thank you so much. That's greatly appreciated. We'll have the links in the description area.
Great. Thanks, Kenneth.